morning, everyone. Welcome back to our morning cup at A. I'm Joseph here. So, looking at the Hang Seng Index futures, the index have resumed their upside movement yesterday, eyeing to test this 26,000 point level. So, at this juncture, we still keep a bullish bias on the Hong Kong market. You can see that over the week, right, Hang Seng Index basically prop up by the big cap stocks and the funds flow are going for the bigger cap counters as you can see now, right? These are the few counters that market are looking at: 9988, 700, 18, 110, 2269, 992, 2359, 981, as well as the 2899. So these are the few big cap stocks that the market is actually looking at, whereas the funds are actually moving out from the smaller cap counters. So just pay attention to the bigger cap counters in the Hang Seng Index, right? And as for the China A50, you can see that for the past 1 week, right? The A50 also are moving higher. Despite that, for the if you looking at the longer term, right? Let's say 2 months or 3 months, right? Indeed, the A50 is actually moving downwards. But at this juncture, right, for the past 1 week, right? We mentioned that we look for a counter trend rebound. So if you are looking for a counter trend rebound, you could have made some very handsome profits for the last 1 week. So look at the China market as a whole, right? These are most of the counters that actually close in the positive territory. Only a few actively traded, like 308, right? This 825 managed to close in negative territory, but meanwhile the rest close in the green or positive territory, right? And I think for the last 48 hours, what the market really actually try to digest is that what happened between US and Iran, right? Just to recall, Besson have mentioned last Wednesday and Thursday, they are going to sign a peace agreement. But however, until Friday and Saturday, nothing has happened yet, right? So Iran mentioned that they are not talking to the US, and yesterday night, Trump have mentioned that the US is going to go for low key, right? They are not going to uh, uh, mention about negotiations with Iran, but rather he's going for the economic measures, more sanctions on the Iran, so that to force them to open up the Hormuz Straits. So what happened right now is that the market are just afraid that Trump have give up to actually open up the Hormuz Straits, and the effect is that the oil price have went up yesterday night, and right now the WTI crude have went above 82 level. So next level that to be seen will be 86, where you can see that the last uh, during the late July and early August, between 86 and 75. This is where the Trump have mentioned that they are going to sign the peace agreement to open up the Hormuz Straits. If that fail to be opened, right, oil price may see on the further upside if it breaks the 86 resistance level. So at this juncture, we still keep a bearish bias on the crude oil until it break past 86 resistance, right? As for the gold, continue to move on a downward, but on the gold have actually break past the 4,002, and right now heading to 4,004, showing that a very strong sentiment on gold is happening right now. Right. Meanwhile, the S&P 500 have managed to climb above 7750 level, showing that the sentiment remained positive right now. But after the escalation of the oil price, market have revert to consolidations yesterday. But meanwhile, right, looking at the Asia market, right, yesterday we do see that the Nikkei 225 index have managed to move on a high basis. Just to recall, Besant have joined forces with the Japan to actually buy the Japanese yen, and a stronger yen have instilled a strong confidence in the equities market. You can see that Nikkei 225 have moving upwards after the US jointly with Japan government to actually intervene buying in the Japanese yen. right? So the net effect is that the stock market has been, Japanese stock market has been moving upwards, and right now going to break the 50 days moving average. So overall, we still keep a bullish bias on the Nikkei 225, and you can see a very strong support have formed at 61800 point level, right? So as long as the Japan don't break the low that's seen in July, right? The index should be moving higher high. Now same goes to the S&P 500 as well. We can see an interim bottom that established in the month of July. As long as the S&P 500 don't breaks the July low, right, the index should be moving higher high basis. So looking at the S&P 500 over the week, right? We can see that the funds are actually rotating out from the smaller cap, moving into the bigger cap as well. Those shows that market sentiment is risk on right now. So among the US stocks, one of the counters that I've been looking at will be Microsoft, right? I continue to stay bullish on the Microsoft. Meanwhile, the other counter that we have mentioned, I think for the last 1 year, 7 to 8 months will be one of the leisure stocks, AB&B, right? After they release their results, you can see that the AB&B have skyrocketed, move up, surge up, and become trading at a multi-year high right now. So after breaking past 170, right, AB&B is heading towards 190 and followed by 200. Okay, so if you follow our morning kappa at some time, you can see that one of the US stocks that we have mentioned quite long time was AB&B, especially the northern regions that we have did a few sessions in the evening that I mentioned about AB&B, right? Then on, as for the FBM KLCI, it's actually moving upwards. Looking at the weekly chart, right, the technical setup remain bullish as well. The FBM KLCI have climbed above the 20-week moving average. So looking at the higher time frame, right, FBM KLCI is bullish right now. Then on last week, what we do see is that the strong performance was seen in the construction sector, lifted up by the sentiment on Gamuda, IJM, right? And then on, we also see the plantations and utilities have garnered positive inflow together with technology stocks as well. So yesterday, what happened is that the tech stock continue to move on a higher high. I break past the 78 right now, moving to the 75 level, right? And so in the tech space, non-current stocks, I think one of the counters that we have mentioned was DNEX. So DNEX have undergoing consolidations, and right now it has break past the 46 cents, and right now, yesterday almost touched 50 cents. The next level will be 54 cents and above, right? Downside support will be at 42 cents. Right, then on, we have another counter that actually garnered my attention as well, which is the VS. So VS have pulled back recently for consolidation. So it bounced off the 22 cents and climbed above 24 cents. So the next level will be 26 and followed by 28 cents. So look at the VS, right? The price volume profile will show a very interesting picture. A very strong support have formed at around 20 cents. Then a second interim support. You see the price volume profile here. The volume bar have actually went out, protruded. This shows that when the shares have corrections at 22 and 24 cents, that's where the smart money are accumulate the shares at 22 and 24 cents. So right now, the shares have actually moved to 25 cents, right? Since strong accumulations seen at 24 and 20 cents. And right now, right, the VS have a higher chance to move towards 26 and followed by 28 cents. Okay, and as for the trading stock this morning, we'll be firstly look at Suncorn that break past 8 ringgit 20 cents. The next level will be 8 ringgit 55, followed by 8 ringgit 85. Downside support is 7 ringgit and 90 cents. Then on with Franken, break past 5 ringgit 35, and next level is 5 ringgit 65, followed by 5 ringgit 90 cents. Downside support is 5 ringgit and 10 cents. So we have Suncorn and followed by Franken, which is a breakout stock. I'll stop here and pass on to Leng on the plantation sector report. Thank you.
Thank you, Joseph. Yeah, so today we've got the plantation sector note. This is for a results preview as well as the stats that came out yesterday. So just let me quickly run through the results preview, and excuse my voice, I have a bit of a cold. Okay, so second quarter 2026 results, we're expecting to see a similar earnings trend for both the Malaysian and Indonesian centric planters, where we are expecting to see earnings improve quarter on quarter, driven by stronger FFB production as well as higher CPO prices. If you look at CPO prices, Malaysian, excuse me, the spot prices rose 8.2% quarter on quarter to average 4,519 ringgit in second quarter 2026, and PK prices jumped up about 7% quarter on quarter. And then if you look at FFB output, for the planters under our coverage in Malaysia, FFB output improved by about 8.4% quarter on quarter during this second quarter. And so similarly for the Indonesian centric planters, we also expect to see similar earnings growth quarter on quarter. Although the CPO prices net of taxes was slightly flattish, but we expect to see that FFB production would have increased. We're estimating the increase to be around about 15% quarter on quarter. On a year-on-year basis, also we expect to see a trend of flattish to slight increases for the earnings for both Malaysian and Indonesian centric planters, and this was because last year second quarter was like a slightly higher base. So if you look at it on a combined regional output basis, or combined regional basis, FFB output under for all the planters under our coverage grew by about almost 12% quarter on quarter in second quarter 2026. And first half output was about 1.2% up a year on year. On the downstream side of things, we note that downstream margins could have improved for the Indonesian players, while Malaysian players may experience a moderation, and that's mainly because if you look at the upstream to downstream tax differential in Indonesia, it actually increased in the quarter to by 38% quarter on quarter. So that was because they captured the full export levy hike that took effect in March. So as a result, we could see margins improving for the Indonesian downstream players, whereas Malaysian downstream players could see slightly weaker quarter on quarter and year on year margins. So overall, if you look at all the companies coming with results coming up in the next couple of weeks, we're expecting largely in line earnings for second quarter 2026. There are four companies that have already reported, and these are the four Indonesian listed players, where we actually saw two companies come in below expectations, one come in above and another in line, where the lower than expected performance from those that I have reported was mainly due to a slightly lower than expected FFB output, as well as some inventory buildup. Going forward into for the Malaysian planters that are coming up and the Singaporean listed planters that are coming up, we do expect to see most coming reporting results that are mostly in line, but we're expecting to see potentially three that may disappoint, and that would include Golden Agri, TSH Resources, and Johor Plantations coming from lower than expected FFB output. But going to third quarter 2026, we expect earnings to continue improving quarter on quarter, given the seasonally stronger output as well as higher CPO prices. So let's move on to the stats that came out yesterday. What we saw in the month of July is that production actually rose 5.6% month on month, and that brought year-to-date July output growth to minus 0.2% year on year. For Indonesia, the number is only up to May so far. So up to May, we are still seeing pretty decent growth in Indonesia, with year-to-date output up 10.6% year on year. So in terms of the expectation of production going forward, we do expect that there will be an impact of El Nino, but that potentially could come in towards the year end and 2027. So which means that second half you will probably still see stronger earnings, stronger FFB output versus the first half of the year. Exports increased quite substantially in the month of July, up 15.6% month on month. and that brought year-to-date 2026 export growth to 9.6%. And this was happened despite the big CPO soybean price spread, which is about $400 per ton in the month of July. And we believe that the reason for the increase was because of restocking activities from the key importing countries like India, especially given the festive season that's coming up in November. If you look at the stock levels in the key importing countries, we only have numbers up to June so far, but the stock levels already mostly are at below historical levels for India, for Pakistan, for Bangladesh. The only country that is sitting at stocks above historical level is China. So we think that, you will continue to see strong buying activities going to the next few months, especially given as I said, the festive season coming through. So overall, as a result of the higher production, and despite the higher exports, we saw inventory levels rising to 2.63 million tons in the month of July, which is up about 3% month on month. And with that, your stock usage ratios also increased to 12.9% from 12.4%. Going forward, while we note that the stock levels are climbing, we don't think it's anything really to worry about, given that, as I said, El Nino impact is coming towards year end, and it will affect 2027's production numbers more than 2026. As well as that, we expect to see continued replenishment of inventories going into the second half of the year. So we do expect, however, that stock levels will probably remain above the 2 million ton mark for 2026. So overall, we're maintaining our sector overweight on with the CPO price assumptions of 4,004 for this year and 4,005 for next year. Please be reminded that we will only impute the new 2027 price assumptions in our earnings during the upcoming result season. So you will notice that some of our target prices are already a bit out of whack, but we will be adjusting these in the reporting season. So keeping to our overweight sector call with our top picks in Malaysia, we still continue to like Johor Plant SOP, IOI Corp, Hap Sing Plant, SDGA 3, in Indonesia, Triputra Agro Persada, and in Singapore, First Resources. So okay, that's the end of our presentation for today. That's all that we have for today. Thank you for joining us. Happy trading, and see you again tomorrow at RSB Morning Kappa.